All right, if you've ever turned on the financial news and felt like you're trying to decode a secret language, you are definitely not alone. So today, we're going to break down the three biggest names you hear every single day: the S&P 500, the Dow, and the Nasdaq. Let's get right into it.
You see this headline all the time, right? The market is up or the market is down. But what in the world does that actually mean? I mean, are they talking about every single stock out there? Just a few of them? This simple phrase is really a shortcut, and it's a doorway to a much bigger idea. So let's figure out what's really going on behind that headline.
Okay, so at the heart of that news report is something called a market index. It's basically a single number that acts like a report card for a specific slice of the stock market. It takes a whole bunch of stocks, mashes their performance together, and spits out one number that tells us how that group is doing as a whole.
An even easier way to picture it is like a basket of stocks. Instead of trying to keep an eye on thousands of different companies, which would be impossible, we just look at the value of this one basket. Is the basket worth more today than it was yesterday, or less? That simple idea is the key to understanding the market at a glance.
Now, there are tons of these baskets out there, but let's be honest, three of them totally dominate the headlines. These are the big three U.S. stock market indices, and each one gives us a really unique picture of what's happening in the American economy. So let's meet the stars of the show. You've got the S&P 500, which we can call the benchmark. Then there's the Dow, kind of the classic. And finally, the Nasdaq, the tech titan. Right away, you can see they're all focused on very different things. From a huge, broad overview, to just a handful of old-school giants, to the new wave of innovators. We're going to dig into what makes each one tick.
All right, let's start with the big one, the Standard & Poor's 500, or as everyone calls it, the S&P 500. Seriously, if you're only going to follow one index to get a pulse on the entire US market, this is it.
And the name pretty much gives it away. It tracks 500 of the largest, most influential public companies in the United States. That number, 500, is what makes it so powerful. We're not just talking about a few big names. This is a wide, diverse group that covers pretty much every major industry in the economy. Because it's so broad, it's pretty much universally seen as the best single measure of the US stock market. When you hear the S&P 500 had a good day, it's a really strong sign that overall corporate America is doing well. It's the benchmark that all the pros on Wall Street use to measure their own performance. Now let's talk about the one your parents and grandparents probably followed, the Dow Jones Industrial Average, or just the Dow. This one is the OG, the oldest and most famous of the bunch. And whoa, talk about a contrast. We just went from 500 companies in the S&P all the way down to just 30 in the Dow. Yeah, it's a very exclusive club. The Dow is what we call a blue chip index. That means it tracks 30 massive, super stable, industry-leading companies. We're talking about household names like Visa, Home Depot, or Coca-Cola. It gives you a fantastic snapshot of the biggest, most established players. But that focus on history is both its strength and, well, its weakness. It tells you how the titans are doing, but it can miss what's happening with newer, faster-growing parts of the economy. And that brings us to our third player, the one that's all about innovation, growth, and what's next, the Nasdaq Composite.
And just look at that number. The Nasdaq Composite includes almost every single stock listed on the Nasdaq exchange. That means it tracks over 3,000 different companies. By sheer numbers, it's the biggest of the three by a mile.
Now, while it includes all sorts of companies, the Nasdaq's personality is heavily influenced by the giant tech companies we all know and use every day. Because of that, it's really seen as the main barometer for the entire technology sector. If the Nasdaq makes a big move, it's a huge signal about how investors are feeling about tech and high-growth companies in general. So we get it. They track different numbers of companies and they have different focuses. But there's a slightly more technical difference that is actually incredibly important. How are their values calculated? It all comes down to a concept called weighting. So there are two main ways to do this. The S&P 500 and the Nasdaq are market cap weighted. That just means that the bigger a company is, its total market value, the more pull it has on the index. The giants have a much bigger say. But the Dow, it does things differently. It's price weighted. This means a company with a higher stock price has more influence, even if it's a smaller company overall. This is a really crucial difference because a single high-priced stock can move the Dow a lot more than a massive company with a lower stock price.
Okay, so we've met the big three. We know what they track. We even know how they're calculated. But
why does any of this actually matter to you and your wallet? Let's connect the dots.
It really boils down to three main ways these big numbers connect directly to your life. They let you benchmark your own success, they help you check the market's mood, and they are the engine behind a lot of common investment products.
First up, benchmarking. An index is basically a ruler. Let's say your own investment account went up 10% last year. Hey, that sounds great. But if you see the S&P 500 went up 15%, you instantly know that you actually underperformed the broader market. It gives you a clear yardstick to measure against.
Second, it's all about market sentiment. Think of it like a mood ring for the entire market. The daily ups and downs of the Dow or the Nasdaq are a super fast, simple way to get a feel for the general vibe. Are investors feeling optimistic and buying, or are they getting nervous and selling? The index gives you a quick answer.
And finally, and this might be the most important one, you can actually invest in these indices. You can literally buy the basket through things called index funds and ETFs. With a single click, you can own a tiny piece of all 500 companies in the S&P 500. It's an incredible way to get instant diversification.
So there you have it, the S&P 500, a broad snapshot of corporate America. The Dow, a historic look at the established giants. And the Nasdaq, a real-time pulse on innovation and growth. Each one tells a different, but very valuable story. So the big question I'll leave you with is, which one do you think tells the real story of our economy today? There's no single right answer, but now you've got the tools to form your own opinion. Thanks for tuning in.